All right, here we go. Stocks by the numbers, welcome back. And as per request, a lot of people getting it trending. People talking about Aurora Innovation, ticker symbol AUR, listed here on the NASDAQ. So let's get into it. Let's find out what's going on. Stock right now, 520, up almost a dime, 1.75% on the day. And I just want to look at it technically very quickly. We'll look at fundamentals also. You can see, of course, this was SPAC company, pops up at the open, drops all the way down for a year and a half straight, and then has been on the up and up for about the last 2.5 years. So we're technically making higher highs, higher lows, and you can see that this is kind of our short-term support that I have drawn out here. Let me get you some dates here. This was the bottom, looks like October 30th, kind of 23, and I have that going to the bottom body of this candle right here, June 4th, 24. So that's kind of our first level support, right? Then I'm going back. This was the all-time low back here, December, third week of December, it looks like 2022. And you can see I have this purple one. This is our all-time support, right? So that's going to the next lowest bottom. So that's our long-term support. And this coming up is touching, let me zoom in for you. This coming up, you can see, is going through that body, but touching the bottom wicks of all of these candles here throughout the third week of March and middle of April 2023. Okay, so for your point of reference, and of course, then we have our resistance levels as well. That's going from the all-time high back here, mid-November 21. And we come down here and we can see I have the top line resistance at the top wick on February 14, 25, and this trend line coming across the top of the body of this same candle on February 14, 25. So, after all of that, again, I see higher highs, higher lows, right? So technically we're trending upward. However, it does seem like the company needs some time, right? And of course, a little background on the company. This is driverless technology, right? We're talking about the EV space and getting the software into autos so that they can drive themselves and you don't have to worry about anything. And they have a long-term agreement and deal signed with NVIDIA. I wasn't able to find any specifics. So, in my opinion, that tells me, even if it is for a potential option for a greater deal and larger orders down the road, it will most likely start to trickle in 6 months from now, in my opinion, right? So, because we're going to have to not only test it, but then we're going to have to perfect everything. So, even the company is projecting that not a lot of revenue is going to be coming in over the next couple of quarters. So, in my opinion, this could turn out well if, again, someone like NVIDIA puts in big orders and they develop these driverless trucks. But as you can see, if the technicals are showing us anything, if we're going to be staying kind of in this long-term symmetrical triangle, right? Because let's say it's not going to break down and it's going to hold its value, similar maybe to something like an ASTS, right? Because people see the value and the potential that could be coming, but we can't break it out because it hasn't happened yet, and we can't break it down because it could potentially happen, right? So if we hypothetically stay in this big triangle, and let's say we don't go all the way to the apex, you can see the apex is about a year and a half from now, right? The apex is December of 26. But even if we come back early and we say like here, right? You can see if we break out around this time, pre-apex, this is mid-year of 2026. So again, this is, of course, isn't set in stone. But if this is the pattern, and we're going to hang out because it's a longer term stock, and now we're going to get orders coming in and it's going to get upgraded, then that's when the breakout is going to happen. So I'm not necessarily saying that this is a waste of time. I think personally at $5 a share, it's overvalued because it's sitting here with a market cap of $9 billion and they're losing about $200 million a quarter and they have no revenue coming in. So, of course, simple logic, common sense, simple fundamentals show you technically that this stock is ridiculously overvalued. Stock should be sitting probably at like $2 billion and change, in my opinion, the market cap, which is what they say the assets are. which we'll get to in a second. But in my opinion, I do think it can break down. I just don't know if it will because of the potential and the name behind it. So you may just see a pullback here to this support, and then it could bounce. But as you see, if we do kind of start to immediately drop down here over the next couple of weeks, you're looking at the high threes, maybe about 3.75, like 380, 370s kind of. So that could potentially be where it could come down to. And then you have to see if it bounces and does what we predict it's going to do, or if it's going to break and drop even lower and maybe take even longer, right? But right now, again, market cap 9.2 billion. Company is hit and miss really over the last 4 quarters. 2 wider than expected losses, 2 more narrow than expected losses. We can see again, no revenue coming in, losing about 200 million a quarter. Expenses recently increased. We'll look at the fundamentals quickly. And debt 115 million, kind of hovering around that, 115, 120 mil. This time last year, free cash flow minus 158 million. Right now, as of last quarter, minus 150 million. So I guess that's good. Cash consistently dropping as of last quarter. This says 171 million. Up here it says a billion. So I guess we'll look into that. But the good thing is assets are heavily outweighing liabilities. So we don't have heavy liabilities weighing on the company. The problem is right now we're operating at a loss. And off the top of my head, I mean, if it's costing 200 million a quarter to keep the doors open, then chances are once you actually start producing goods or services, you're going to need more than that to cover your expenses and your overhead per quarter. You understand what I'm saying? So, they probably need to bring in like 300, 400 mil and change a quarter in order to compensate for this $200 million loss. So that's why I'm saying, in my opinion, even if revenue comes in, it still might take a very long time before the company can justify 9, 10, 15 billion dollar market cap, right? However, we have learned that market cap is kind of insignificant, really, because some of these companies are just out of control. But I also wanted to show you, because of course people are always worried about dilution, and I just wanted to show you here, if you look at the actual number of shares outstanding, you can see we are consistently increasing quarter over quarter. And I know kind of in this new beginning startup phase, I know that these companies do this. However, I just want to show you 1.18 billion shares back here about, what is this, 8 quarters ago. Now we fast forward, we're up to 1.74 billion. So the number of shares outstanding has increased roughly 50% from where it was just not only 2 years ago. So this stock, in my opinion, really should be dropping. But again, if we're connected to NVIDIA and we're in the auto space, driverless vehicles, I guess it's going to hold its value. I don't know. In the numbers here, you can see assets up here hovering around 2 billion, was above 2.25 billion, dropped the last 2 quarters, right? You can see here, even in the past, you can see assets were, because someone mentioned this in the Discord, and I'm not trying to beat you up, but you can see here assets 1.68 billion, Q2 at 23. Then we jump up to 2.25 billion in the assets, and then we slowly give it away. 2.23 billion, 209 billion, 191 billion. Then we pop up back above 2.25 billion. Then we're down to 2.14 billion, now 2.07 billion. Based off recent trends, next quarter, assets are probably going to drop to around 1.9 billion in change, in my opinion. Also, we can see that the liabilities are slowly ticking up as well, now approaching almost 300 million. So technically, we do still have a good ratio of assets outweighing liabilities, which is yielding positive equity. But you can see, again, same thing, right? The equity, because equity is assets minus liabilities, right? So as these numbers change, it's going to influence the equity, but it's all kind of going to move together for the most part at this point in the company's stage anyway. But you can see equity, 1.45 billion. Then when the assets jump, it jumps up to 213 billion. then down to 199, 186, 17, back up to above 2, 188, down to 17, probably down again, and then back up to 2. You understand what I'm saying? So that's why, is there long-term value here? Yes. Tomorrow, is it going to explode? They're going to need some pretty big news headlines for that to happen. But in my opinion, it could be good. I just want you to understand, you might be married to this one for the next 1-2 years. So if that wasn't your initial intent going in my opinion, you may want to reevaluate. But again, it's just my opinion. But you can see also that this is eating away slowly at our book value, which is now down to $1.01. And now we're trading, over 5x that for a company that's not doing any revenue yet. So that's why, if you're looking at this fundamentally, you can definitely appreciate the fact that Wall Street could start hitting it. But again, it might hold its value. It's hard to call, just because, in my opinion, nothing's real anymore for the most part. All these trending stocks, again, ASTS, no revenue, market cap 15 billion, right? So again, that's what I mean. None of this is real, right? The market cap might not even matter, even though it does for every other stock that isn't trending on Reddit. Palantir, stock should be half price. I have no idea why it's staying up. That valuation is ridiculous. I just wanted to pull up a FinViz on the other screen, and it's showing the short float here on Aurora is about 13%, which isn't too crazy. If it was 30%, maybe we'd be talking about something else. You could see price to book here at 5. Enterprise value, which is what another business would be willing to pay for it, which we don't normally look at, but interestingly enough, the enterprise value is about 8 billion, market cap 9 billion. Our return percentages obviously are negative. Okay. We don't do dividends. And again, look, you can see this. If we look quarterly, right, we're expecting revenue to start coming in over the next 1, 2, 3 quarters, which absolutely is a very good sign. However, for a $9 billion company to now finally bring in $500,000 is nothing. Again, it costs them right now, without doing anything, it's costing them $200 million a quarter to keep the lights on. So you can see, revenue coming in, good? Yes. Enough? No, it's not enough. Half a million. Q3, we're expecting 1 million. Again, these numbers could change, of course, we know. But as of right now, going off of what is laid out here by the company, what's being forecasted by analysts, and I'm just looking at, again, the timeline of when this business is actually going to start pumping. And you can see, look, we're bringing in a couple of million here at the end of 25, 2.7 mil. So even if we hit these marks, I mean, you're bringing in $4 million for 2025. And then, again, it's going to cost $200 million. So that's what I mean. Even if they hit these marks and, let's say here, like, 1.02 and the company posts 1.15, right? You might initially get that pop. And then it'll more than likely slowly bleed and give that rise away. And, I just want to remind you again, and again, I understand it's not necessarily an EV company. It's in its own category. I know what you're going to say. But again, I just want to remind you about all those EV stocks, right? They got pumped up in value. They kept diluting, raising cash for themselves, but they couldn't really get up and running. And then when they did, expenses were higher than they expected, or it was going to take an extra year longer than they anticipated, or when they finally started to produce the vehicles, nobody wanted them, or there were issues, or they had to charge an extra $15K because they messed up their figures or something, right? You understand the point I'm trying to make. And if you go back and you look at all those stocks, they just slowly bled, gave value back over time, and then, of course, went bankrupt. Now, chances are this company's not going to go bankrupt, in my opinion, just because of the connection to NVIDIA in the moment. But it's a difficult one to call. And over these quarters, again, if we get these little pops as the revenue comes in, and then it starts dropping down even lower, in my opinion, you can't be surprised. Going into Q1 of 26, you can see almost 4 million. right? So it looks like 2026 could potentially be the breakout year, which again is why I was saying it might start to climb up going into 2027, right? Because you can see that's when the business is really going to take the next leg higher. So halfway through 26, kind of going into 27, in my opinion, if these numbers are correct and this is the timeline that the company's going to be on, let's say, hypothetically, right? Perfect world, nothing bad happens. Then, in my opinion, this would justify value much, much more than this. Right? Which is why I'm saying if we look at the apex of the potential symmetrical triangle that's forming, you can see again that the apex was around December of 26, but the smart money is going to get in before that because your money, quote unquote, the dumb money, that's when you're going to be buying. Or you bought already. And they're going to break it and drop it and force you out and then pump it up later. You understand? So that's why I'm saying, in my opinion, could it hold its value? Could it play with, support and resistance levels and bounce around? Yeah, of course. If you're looking for a quick trade, it could go from 5 to 6.5, right? Who knows? But also at the same time, it could drop to 3.5. But I'm just saying, in my opinion, if I was managing a fund, if I was really managing people's wealth right here, and it was my call as an analyst, in my opinion, I would wait roughly 12 months, as I showed, from today. I would look at around the middle of 26, and I would start to build a position here as the company's now bringing in tens of millions with the potential to hit, again, 275 million potentially going into 2027, and then you could see 2028 almost 900 million. So believe me, again, as these quarters come in, if they hit these marks, it'll be a good sign, and it might initially pop, and you might start to get that FOMO feeling. But I do have a feeling that even if it does pop on the quote-unquote positive news, I do think it slowly gives it back and bleeds away. We're still expecting, look, the same losses every quarter, right? 11, 12 cents a share. So that's what I mean. Bringing in 2 million doesn't matter. It's going to cost you 200 million. Bringing in 4 million doesn't matter. It's going to cost you 200 million. And you can see, look, even if we pull out and we look at the years going forward, 900 million, we fast forward to 2028, we're still going to be losing 20 cents a share. Right? So this company is literally telling you, we have to bring in like 1.4 billion before we're going to be profitable for the year. Next quarter, they're expecting $497,000 or whatever it was, right? So I'm just trying to keep it realistic and put that into perspective for you. But let's read the news and let's check what analysts are saying. So we see we have 10 analysts covering the position, 5 giving it a strong buy, 5 giving it a hold, right? So it's either a buy or it's a hold, which of course, in my opinion, is sad because nothing has happened yet. So I really don't understand. Even a strong buy, right? Not even a buy, strong buy. Which of course probably tells me that, in my opinion, those analysts and their firms probably have a position in NVIDIA or something like that. Aurora launches Lloyd's-backed property owner's product. What is this? Algorithmic insurance platform Aurora has launched a property owner's product. Algorithmic insurance platform? Said the Lloyd's-backed product will provide up to £3.5 million, or roughly $4.7 million, of comprehensive coverage, with immediate plans to increase capacity. Product is designed to mitigate underinsurance for UK residential and commercial property owners. Last year, Aurora launched its flagship commercial combined product with the limits up to £12.5 million, backed by AXA capacity. This followed the launch of its management liability coverage, also in collab with AXA. Director sells shares. Sold 46,000 shares. Huh. Well, it's a chunk, but it's not a big chunk. Not reading all that. We're moving. Aurora slides on Uber $1 billion exchangeable notes sale. What is this? Shares of self-driving tech maker Aurora Innovations slide 17.5% after stockholder Uber secures capital raise. Announced pricing of $1 billion, 0% 3-year exchangeable notes offering. The notes will be exchangeable into cash or, per certain share delivery conditions, units of reference property or combination of cash and units. Initially, each unit of reference property will comprise one or share. The initial exchange price of $8.50. That's obviously lower than we are now. This stock was at $7 when this came out. Uber were $992 billion market cap. Plans to use net proceeds general purpose. Shares of Uber were up. In January, Aurora inked a long-term deal with NVIDIA and Germany's Continental to deploy driverless trucks. Right, so that's the long-term deals that we're talking about, which is probably why the stock is holding some sort of value, even though it's, again, long-term. 1.8 billion shares. Uber is its largest shareholder, so basically worried about dilution, of course, now, if these are going to be exercised into more Aurora shares. I mean, of course, good that they have, that somebody like Uber has a share. New until will be exchangeable to 2028. December, Uber sold its self-driving car unit to competitor Aurora and said it would also make a $400 million cash investment in Aurora. Huh. So again, deals could potentially be coming. Neutral at Goldman Sachs, price target raised to 7 from 6. Why? Well, no reason for that. Maintain buy at Needham, price target raised to 13 from 10. Are you kidding me? 30% raise in price target. Why? Again, because it's trending, because it recently exploded for no reason, and of course retraced back to the SPAC level, as these companies do when it's undeserved, in my opinion. Look at this. Even analysts were expecting a $250,000 this quarter. They reported zero revenue back 2 months ago, May 8th. So that's what I mean now. If we're supposed to be generating revenue, now we're behind schedule, technically. I'm surprised they're keeping the target at 12. I'm just going back, double checking, making sure I didn't miss any other deals or anything like that. Loss widens, $170 million cash as of March 31st. So that's one more quarter, right? So that's what I mean. Probably they're gonna have to raise more capital. So that dilution's coming, in my opinion. Loss of $211 million, reflecting a 9% increase in operating expenses due to higher personnel and hardware development costs. Net loss $208 million, 26% increase from the previous year, driven by increasing operating expenses and a change in the fair value of derivative liabilities. Huh. I don't know. I have a feeling this is going to be very bad. And again, I don't wish that upon you. Net loss 12 cents compared to 11. 9 million fair value to derivative liabilities. Focused on developing the Aurora Driver, a scalable suite of self-driving hardware, software, and data services designed to adapt and interoperate among various vehicle types and applications. This development is central to Aurora's strategy to transform the global transportation market. Again, in my opinion, I'll believe it when I see it, because of course every company that has ever went public felt they had groundbreaking technology, their product was the best, they were going to change the entire industry, right? Which of course we know, laws of probability, they all can't do that. Manage fleets while subscribing to the Aurora Driver. They launched its service, Aurora Driver, for free, which is expected to have a significant impact due to high industry demand and attractive unit economics. Then big deals should be signed then soon. Plans to extend capabilities to the passenger mobility market with Aurora Driver for rides, and eventually to the local goods delivery market, leveraging the extensibility of the Aurora Driver. Alright, I'm going on for too long. I gotta wrap this up. Intends to partner with OEMs, Tier 1 auto suppliers, fleet operators, and other third parties to support the commercialization operation of Aurora Driver-powered vehicles. Aurora anticipates recognizing revenue from its driverless operations of trucks hauling customer loads between Dallas and Houston, Texas, during the 3 months ending June 30th, 2025, marking a significant milestone in its commercialization efforts. So some slight revenue is going to be trickling in. I don't know, again, I just feel like people are getting too antsy, too excited, just because, in my opinion, younger traders or smaller investors see that this stock is trending. Again, it's in self-driving space, talks about them with NVIDIA. The stock's only $4, $5, $6 a share, so everybody loads up. And again, I kind of get it. But also at the same time, people need to understand, just because a stock is $3, $7 a share, it doesn't necessarily mean it's cheap. Or it's worth investing in. Yeah, with the first company, Maintain buy, Concord Genuity. Price target raised from 10 to 15, I swear. Rolls out commercial trucking in Texas. Right, yeah. Okay. Company said it intends to expand the service to El Paso, Texas and Phoenix, Arizona by the end of 2025. End of 2025. Aurora said its trucks are equipped with the Aurora Driver hardware kit and various redundant systems, including braking, steering power, blah, 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 without a human driver. Aurora's launch clients are Uber Technologies, Uber Freight, and Hirschbach's Motor Lines. Alright, wait, so they launched this early May. See, and again, we get news of these deals with NVIDIA and Continental, but I'm not seeing contract length, any financials at all. In my opinion, that should be disclosed to us. Alright, so that was May 1st, it said? May 1st. So yeah, it was in the 7s. It popped up to 8.25 on that news. Dropped, tried to regain that value. And now it's down, 40% from that announcement. Yeah, I think it's going lower. This stock should go lower anyway. So, in my opinion, again, you're locked into this one for the longer term. I want you to understand that. Stock is massively overvalued in my opinion, so please understand the risks involved. if you were looking to get involved here, again, I would look, keep an eye on the support trend line, right? About 3 3/4 here. If it does happen to come down here, you want to make sure that it holds and it stays inside this range, right? Because if it breaks, again, next stop could be 265 roughly or something like that. And of course, that would completely break the technical trend as well of higher lows. So something to keep in mind. You know, will people tell me they're going to change the world and I don't know what I'm talking about? Of course. It's what people always say. But again, $9 billion. And remember, it was up here at 10-11, right? And now at half that price, the market cap is $9 billion, which means we can easily half it again down to 265, this trend line, and the market cap would be $4.5 billion, which would still be ridiculous. So that's why I'm saying Wall Street could hit this. And of course, we showed, what, 170 million in cash roughly? Cost them 200 million a quarter. So new issuance could potentially be coming sometime soon in my eyes. But that's pretty much all I have to say about Aurora Innovations. If you have anything to add, drop it down in the comments, and I'll end it there. So thanks for your time. Thanks for stopping by. As I always say, like the video, share the video, comment, all that stuff helps out the algorithm for some reason. I don't know why. But our handshake agreement again, subscribe to the channel, right? That's all I ask. But moving forward, more importantly, like I always say, I understand that markets are rocky, volatile, and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.